According to a recent study, the food inflation in Canada is outpacing the wage growth for the past 3 years. According to a news article published by Peter and Bloomberg that says the food inflation is the number one reason which is causing these strikes across the Canadian public sector. Most of those workers are actually demanding 24% pay rise to be able to catch up for the price increases that we have seen for the last 3 years. For the record, according to Stats Canada, the food inflation in Canada for the past 3 years has been 20% plus. Okay, so the 20%, the prices have gone up by 20% in the last 3 years, versus the wages per Stats Canada has only gone up by 12%. Okay, even though Stats Canada's measuring of CPI is heavily manipulated, but even according to that statistics, if we consider that, the wage inflation is much lower compared to food inflation. Okay, and that's the reason why the workers are seeing the tightness in their budget, because they are not able to catch up with the food prices for the past 3 years. Sorry for the interruption, guys. Please, if you like this content and you get any value out of it, please subscribe and like this, because it will help my channel a lot. Thank you very much. Enjoy the video. And what is the solution? Well, Canadian government, both provincial and federal government, are coming up with different stimulus packages. Just like, Ontario government announced a $200 checks for 15 million workers across Canada, plus $200 check for each kid for the eligible family that they're going to send out for 15 million Ontario residents. For the record, that is coming up to $5 billion spent by the Ontario government to be able to stimulate the economy that way. And last week, the Liberal government, the federal government, announced that they are going to send a $250 check to each person across the country earning less than $150,000. That comes up to 19 million workers receiving a check for $250. That sums up to $4.75 billion. Federal government spending $4.75 billion. The Ontario government spending around $5 billion. So almost $10 billion worth of spending to buy votes. Literally buy votes, okay? This is not a Trudeau's problem, okay? Conservatives are doing the same thing. And I'm sure they will do the same thing when they come into the power. So don't keep your hopes too high for this. And all of this spending, okay? I'm 99% sure, even though I don't have any proof, I'm speculating right now, but I'm 99% sure that funding wasn't budgeted, which means it will come through additional borrowing. For the record, Canadian federal government has been running a $40 billion fiscal budget deficit for the past 2 years. So additional $10 billion will be added on top of that $40 billion fiscal deficit. Now that's only at the federal level. Provincial government has also been running fiscal deficits as well. So in simple words, what does it mean? It means this whole spending to bribe voters is coming at the expense of additional borrowing. Who's going to pay for that borrowing? You and I, because we're going to pay in the form of higher taxes and inflation. And as I said in my previous video, there's no inflation. It's currency debasement. Okay, so the currency is going to further debased to be able to pay off the additional spending in the form of higher interest rates and the debt that they have taken on. And so when I say currency debasement, that means you're losing purchasing power of your existing dollar. This whole Keynesian economic policy, it only works when you have enough productivity generated as a result of this spending. But right now, there's no productivity in Canada. So that means every single dollar that the government is spending as a result of additional borrowing, that is going to dilute the amount of currency circulating in the economy. So you and I, all of us Canadians, will continue to lose our purchasing power because of these policies, because of these fiscal spending and deficits at both provincial and federal level. Okay, so it doesn't matter whether this is Liberals or NDP or Conservatives. The fiscal deficit is the big problem, and that is going to remain a problem until and unless they go through a massive austerity, which is pretty hard for any politician to do. So the bottom line is we're going to see these things continue for quite some time, and we're going to see our purchasing power being eroded because of these policies. So the only way to protect that is to buy hard assets. Real estate, but not in Canada. Canada is not ideal for buying real estate for investment purposes. Okay, if I was you, I would buy real estate elsewhere like Dubai, which is investor friendly and landlord friendly. They have no nonsense about you cannot evict the tenant because of non-paying status. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Then I would be investing into physical gold as a store of value. Bitcoin for sure. Not right now because it's too high right now. There will be a pullback. Wait until the pullback, then get into Bitcoin. If you are new in crypto and you're looking for an exchange to start crypto journey today, check the link in the description below. I have a link for the Coinbase platform, which will give you $10 worth of BTC for free if you start using my link. Enjoy the trading. Buying stocks, technology-driven stocks, which has AI exposure. AI is the future. Blockchain is the future. All of these things, keep an eye on them. And maybe some into S&P 500 index that is less volatile and gives 6 to 7% annual return and easily. That will be my strategy. You let me know what you think about it. What is your strategy to protect your purchasing power that is being eroded by these government's policies? And that will continue to happen. If you are interested in reading about these topics like macroeconomics, financial markets, what's happening with the geopolitical situation, what's happening with interest rate, monetary policy, Federal Reserve, ECB, China, Japan, I cover these topics in a very simple and plain English in a very digestible format. If you like to read about this, there is a link in the description about my newsletter that I send out every week. Do yourself a favor, click subscribe, and enjoy reading. Thank you. Let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care.